Hey everybody, it's John. I cover cryptocurrency videos about Dogecoin specifically, Dogecoin news and Dogecoin technical analysis. And today's video, I will be covering the Dogecoin technical analysis, aka the sticks. Before we get to do me a huge favor, subscribe, like, and share. That's all you gotta do, okay? It's very simple. Just tap, tap, tap. The reason why you want to do it is so we can share these videos out with people who have not been exposed to Dogecoin. All right. Today's gonna be a big day for Dogecoin, and I see it coming out for days to come here. And you're gonna want to stay tuned and watch this video for sure, because there's gonna be some valuable insight in here. And let's get to it, all right? So you came for the sticks. Let's get to the sticks. April 6th, 2021. Okay, yesterday was April 5th. I made a video about Dogecoin as well, and I essentially called out that we're gonna break out and that I would buy some Dogecoin as well during the video. But and that's that's pretty much what I did after recording the video, because that's just how it went down. Because I didn't buy that time because I was recording and doing all the editing. But you can see here, that's basically what I did, and I bought about $300 worth on April 5th, 2021, at about 3:51 p.m. I did market buys. I got in about a 5,949 around there. I did the market buy because I thought Dogecoin kind of trying to fight that psychological six resistance. And I said, I'm doing my part, and booyah, through the market buy in there. And I believe I contributed to breaking that resistance. Obviously, I didn't do it myself. All of you good people and everyone in the Doge family supported the Dogecoin that day, and you went booyah, buy. You broke through the resistance, and boom, here we are, marching on towards the next resistance at around 6.3 here. So let's get started with a daily here. Okay, I just want to recap what was yesterday, and for those of you who saw my video yesterday calling it out, I really hope you bought that dip when you got a chance to, because I mentioned that it'll probably be gone sooner rather than later, and apparently it's gone now. So the daily today, current 50-day moving average is about 549. 200 is about 214. Okay, dokie. So current thing to note here is that the current 200 MA, it's still long-term very bullish, but you can see today, near the edge of it, the 200 MA is literally doing a little up, a little curling up action here, a little curling up like this. You see my fingers? It's kind of curling up a little bit. So this tells me that the bullish action is starting to accelerate. I mean, obviously, when you see the little, when you see like this and kind of going like this, you see my finger how slow it moves. That's a pretty big deal for a 200-day moving average, because guess what? It takes 200 days. It averages 200 days of equity trading here, or in this case, coin trading here. And the fact that it even ticked up a little bit, this tells you, okay, okay, we're seeing some powerful Momo here, some volume kind of coming in here. So I mean, obviously, it's one of the many factors you got to take into consideration. You got to drop in the news, the fundamentals, which is the news in a sense, and then the technicals is kind of what I'm going on right now. And I covered the videos or the fundamentals in my other videos with the news and everything. And that's kind of why I let everyone know, hey, this is what's going on. Bull or bear. I try to give it as most. I try to present the news in an unbiased position, even though I am biased towards long and bull here. But I do like to share both perspectives where the bulls and bears lay, because of the sole reason that if you're an investor like me, or you're a trader, a day trader, or whatever, you have to understand both sides, the long and short, the bull and bear. So if you don't understand how they work, then if you're bull only, then you only know the bull section. Hey, guess what? You're missing 50% of the information here, and you can be blindsided. So I try my best to not be blindsided, and I share my information with you as I see it, and I try to report it live or daily as soon as possible, because obviously I have a day job such as you. So within reason. But anyway, so getting back to the technicals here, and now we are seeing on April 5th right here on the current chart, because it ends around 4 p.m. You're seeing it in March up with three green candles here for 3 days straight here, and I literally on April 3rd it bounced off. Oh, no, I'm sorry, April 2nd, April 3rd it bounced off the 50 MA, and it's trending up now. So this is very bullish, because it hit an inflection point and it bounced off it. And by the way, the inflection point was a 50-day moving average, which in another video I called out as well. I believe Friday. So over the weekend, I mentioned, hey, you know what, ladies and gentlemen, you're gonna see some dip buying opportunities. You should probably buy some if you want to get some because once it hits there, but once it hits there by Monday or Tuesday, we're gonna pop back up and move back up because it's a weekend, it's Easter weekend, so people are not gonna want to trade because they're busy with their families, living life. So for those of you who got in because of what I mentioned there, leave me a comment below and let me know. You know, how much did you buy because of that? You know, and how much did you get? I'm curious. Alrighty then. So we're seeing some very bullish action here. So I'm gonna blow up the daily chart here just to get a better view and zoom it in. So you see these two blue lines in parallel here. We are literally in the range right now. The trading range was originally 585 to about 63, right? 585 being the resistance, and I'm sorry, the support, and 63 being the resistance. So you can see that we broke through the 5.8 again, and we've been kind of going in and out of the 5.8 for a couple of times already. But now I truly believe we're going there and then some now. Okay. So obviously with technicals and all this kind of stuff here, it's more art than a science. So it can always break back down. So, you know, always have some dry powder here. I always try to emphasize to everyone, you nibble when you buy. You don't bite, right? You bite, then that means you're buying a lot and you may not have as much dry powder in your pocket. So when it dips down, you are not able to capitalize on those opportunities, okay? That's why you nibble. Yes, when you're nibbling, in hindsight, oh my God, why don't I buy more? And you know what, in hindsight, that is a healthy way of trading. You should never use hindsight, okay? Because you are using the best information you have at the current moment when you trade or execute a buy button or a sell button. So when you do that, that just tells me you're being too emotional. So try to take your emotions out of it and try to look at it from a purely fundamental and technical perspective here, and use that data and information I kind of gather for you guys in the videos and explain to you through my analysis here and say, hey, you know what? Do I feel bullish or bearish here? You know, why or why not? And if you feel like, oh, I'm bullish or bearish here, and you have some rationale behind it, even if it goes down or goes up or whatever it may be, you will feel a lot more comfortable with what you're buying or selling here, and you would be less likely to panic sell or panic buy. So again, the reason why I say buy or sell or panic, etc., is because when you panic, you're being emotional, right? And you don't want to do that. So try to have a level head, watch these videos, share them out with people so we can grow the Dogecoin community together. It's simple. Just subscribe, like, and share. So getting back into it now. So we're also seeing the 50 MA. It's kind of flat now, right? And now it's kind of like going flat and doing a little curl up, like an itty bitty one, which is great because, you know, with a 50 MA, it's 50-day moving average. So it takes 50 days of data and it crunches it and averages it out. So the fact that it's on your curl back up is very good because that means the 200 MA is curling up. Pointing up. The 50 MA is starting to curl up and point up. So that means that we're in a clear long-term uptrend. Obviously, we're gonna wait a few more days to let it progress out. But if this continues here, fantastic news, ladies and gentlemen, fantastic. So that means that on the current volume here, you can see a daily here. The volume is what is why I believe yesterday's video I put a buy signal here because we're seeing a step in volume increase every single day here. So it's not like the previous weeks or previous days when I kind of thought the technicals kind of resetting everything. But it's based on low volume and kind of decreasing volume every single time. That's kind of why I would call it a fake out shakeout. However, this time we're seeing it with volume increase with each step up. This tells me that this is okay. You know what? This is more legit here. This is like ding 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 ding. If you want to get in, you better get in before it's gone. I'm not trying to panic anyone. I'm not trying to fearmonger or force anyone to buy or sell here. But I'm just saying that it's gonna be gone sooner rather than later. When you see this kind of a stepping stones of volume here increasing because this is a signal where people are actually buying it, right? So it isn't just like a boss, buying and selling back and forth to each other, back and forth to each other to keep the price kind of level here. So we're seeing price appreciation with the volume to back it up to support it. So we're seeing the house and the foundation together at the same time. Before we were only seeing the foundation, now we're seeing both together go hand in hand. So it makes a much stronger fundamental play here. Okay, so the volume today is currently about 124 million, right? And we have several more hours for the rest of the day. So I suspect we'll probably end up maybe around 160, 170, which is a lot of volume, for one day. Because if you've seen for the past few weeks, the way I've been reporting these videos here, the volume has been, anemic, maybe 40, 50, 60, So there's almost double or 50% here. So it's quite a bit more. Yesterday was about 79.5, which is quite a bit as well. But today, more importantly, when we push a higher price here, we're seeing more volume here. And the strange thing here is that the higher up the price goes, the more buying you get. It's a very strange phenomenon here. Everyone only wants to buy when it's green and going up. And I try to educate people that you don't want to do that if you're investing because, A, when you buy green and you sell green, that means you're buying high, you're selling higher. That means you have FOMO. That means you're chasing the trade here, okay? However, when you buy red and you sell green, that means you're insulating yourself from even further dips here. And when you sell green, guess what? You're making a profit. So it's a very simple strategy. But I understand that's very hard because on red days, everyone's like, don't look at my screen today. Do not look at the screen. Turn off the computer screen. I don't want to look at it. I don't want to buy today. For me, I see that when it's a red day. Hey, guys, it's Black Friday. Let's go shopping. It's on sale. Let's get some deals right here, right? When it's on green, okay, it's retail price. I don't want to buy today. But I understand that. I understand that why people do what they do here, because not everyone is doing my strategy here, which is fine because there are so many ways from A to Z that there is no right or wrong way here, right? So that being said, the daily MACD here, which is great, and what we're seeing here is that yesterday I mentioned that it started curling up, but now it's doing a straight velocity up like that. So the velocity is increasing, and the 12 MA and 26 MA is diverging, right? Not converging, diverging. So that's what I mean by breaking out here. Okay, when it breaks out, the further it diverges, means that we're going to see higher price appreciation, which equates to simple English as higher highs and higher lows, and that's what we both want to see, right? We want to see our stuff go to the moon, and of course, our boy Elon Musk, the CEO, Doge King, E-God, Techno King, is taking us there, okay? So we're seeing also these sticks also increase right here, right? So why is that drawing? Oh, 1 second. Here you go. So we see 1, 2, 3, 4 days so far of candlestick appreciation here, right? Where it kind of steps up. So usually I always tell you guys, hey, wait for 6 or 7 days for it to kind of confirm here. But of course, on a day chart, it's going to be a whole week, which is quite a bit of time. I understand that, but still, you always need to be patient when you're buying these kind of things because there will always be opportunities to buy and sell, whether you want to buy a dip or not. And with that being said, I'm gonna leave it there and go to the 4-hour chart because that's also quite important. We will see a different trend forming here, and let's see what it looks like. All right. So, alrighty then. So on the 4-hour chart, which is a more short-term time frame here, we're seeing the MACD reset. Yes, I mentioned it. We resets around here. We're gonna see higher highs and higher lows, and you can see it's starting to reset here, right? It's resetting in what I call the bullish territory. So that means that we're going to see a new higher high and a higher low. And if it continues here and it resets in the current MACD bullish territory, that just means that we will start trading an up channel here, an up channel. However, we are also seeing the 4-hour chart kind of diverge as well. So when it's diverging, guess what? We're going to see higher price appreciation and higher highs and higher lows, which is fantastic right here. And we're seeing it also confirm the sticks here, right? So let's see, 1, 2, let me see, about 4 sticks, 1, 2, 3, 4. So in a few more sticks, we'll kind of see confirm. When it confirms up channel, then booyah, we're gonna be good for the foreseeable future here. You can see also on the 4-hour chart, we have a 50 MA over 200 MA, and guess what? That means a bullish cross, and the fact that we're seeing the 50 MA and 200 MA diverge as well, that means that we're going to see higher price action here. We're seeing a line on a daily and a 4-hour chart here, and you can see in my previous video I kind of cut it out, and it's currently still going that way. And the more divergence you have, the more higher the price will go. It's literally that simple here. And we're seeing the volume kind of support over here, right? When it popped up to about 653. The volume was 67.638 million. This one 4-hour bar chart, this one 4-hour candlestick is equivalent of maybe 1 or 2 days back then. I mean, a week or two ago. So the 4 hours, it traded up maybe 2 days of volume, right? So think of that to put into perspective, so you understand why I'm calling this a breakout. and we are literally marching up to the resistance about 6.3 here. So if we tap that and break out, it's gonna be fantastic. So on the forward chart here, we are seeing something what I would like to call a possible cup and handle play. So that means around 6.6, right? Or about 6.7. That's probably where around that area, I mean 6.7 or below, maybe 6.7 to 6.5, around there. It'll probably peak around there, and then it'll kind of come back down, and then that's kind of what I would call a textbook cup and handle play. And we're seeing the 4-hour chart kind of confirm that as well, because you're seeing right here. I'll put the MACD for you to see it. You're seeing the MACD kind of go up as well here, right? So it'll probably do something like this. It'll probably diverge a little more. It'll probably go back up and then come back down, and it may do another cycle such as this one here. So that happens, then guess what? Then guess what, ladies and gentlemen? We may see a cup and handle formation. So basically, for that to happen, we will see the sticks kind of do something like this, come up like this, go around here halfway, and booyah, come back up. When that happens, we're gonna see cup and handle, which means we're gonna break out of the current resistance and go into a new higher high here and a higher low. And that'll be quite significant if that happens. As always, I always tell you guys that this is not a guaranteed fact. It's more of art than science here. But when you combine, when I combine the news fundamentals and the technicals for you, I just want to reiterate that it shows you a better picture of it, and it shows you how likely it to happen. Right? I don't give percentages because you can't give percentages because So that's why I like to use words like likely, very likely, unlikely, that sort of thing, to give you a better idea of it. And as always, I have all the links to all the videos there, so you can check out, read yourself, and get your own opinion about it. Okay, I don't give financial advice. I'm just sharing with all you what I'm doing here. So this is very good in my opinion here, based on what we're seeing so far. So let's go to the 15-minute chart now and see how that looks. All right, on a 15-minute chart, it's looking fantastic, right? It's literally just the 50 over and 200 MA is still a bullish cross, and it's still it's no it isn't really diverging that far anymore, but it's going up in parallel together. So obviously it's gonna stop eventually because it can't continue forever, because that's just the way it is. But you can see here on a 15-minute chart, it kind of puts it into more perspective, right? On a 4-hour chart, it looks super duper bullish, right? So no, on a 15-minute chart on April 6th, about 6:45 a.m., it traded about 14.3 million volume here, right? And then 15 minutes later, it's off about 19.7 million volume. Okay, so that's kind of peak buying and selling right there. So you're seeing people buying and sell right there. So yes, the volume wise, it looks like people are selling more than they're buying. However, the price is still appreciating. So this tells me that there are still tons of buying pressure, and whoever that sold, guess what? They didn't sell enough to break it down, because tons more bulls came in. Because even I came in around 3:15 yesterday. Let's see, April 5th. I don't know where it's at. 3. Here we go. So basically around here is when I bought, near right here, about 345 to about 360. I bought right here. I threw my money here in the hat, and there was big volume, 8.2 million volume here. I bought there because I saw that as kind of like right here was kind of the breakout spot of the resistance, right? Where it's been for so long. So I said, you know what? I'm gonna do my part for a Doge family. I'm gonna buy some. I thought $300. I think about maybe like 3,000 or 4 or 5. I forget exactly. I can check later. Maybe 4 or 5,000 coins right there. I mean, obviously it's not a lot, but I want to do my part to kind of break out of it. And if we all do it, it'll be a lot more powerful together, right? So we're seeing right now on a current 15-minute chart here, the 6.3 is looking like resistance here, but I suspect that we're going to break out of it, because you see right here, we have some pretty high volume kind of coming in and buying it here. So I will conclude the video here. It's Hey John. Do me a huge favor and subscribe, like, and share, so we can break the YouTube algorithm and share these videos out, most importantly, with people who have not been exposed to Dogecoin, or who are the fence, who don't understand what cryptocurrencies are, so we can get more people in the Doge family, and we can grow together, all right? I will catch you all on the next one.